Hey guys, what's up? Hitori here. Welcome to episode 40 of the weekly market outlook with TradeX Prop. Now, in this episode, I'll be going through a few asset classes as well as my outlooks for this week. But if you have any other asset classes you would like to see me cover that I didn't already include in the list, you could join our free Discord channel where you can talk to me as well as the TradeX Prop team, or you could just leave a comment down below in the description. Okay, so yeah, episode 40. Wow, we've done this for almost 2 years now at this point. I think in just a few months it will be the 2 year mark where we've been giving outlooks on a weekly basis to our clients. And essentially, since we have hit the big 40, I thought, you know what, I want to change the technical aspects of the outlook a bit different. When we started off this outlook, you probably, for those that have been watching since the start, thank you, but you probably already know that we start off just purely as a technical based outlook with zero to, very little explanations on the fundamentals, right, or sentiment or stuff like that. It was just purely technical analysis. But we figured out, you know what, that probably wasn't enough, since we all already know that the fundamentals are what drives the markets in the long run. And I'm not saying that you can't trade technical analysis only and be profitable. I personally also have a model that I use that is just purely technicals. But I do think if I'm going to be giving an outlook or a forecast or just any form of long-term bias or mid-term bias, I need to at least incorporate some aspects of the key drivers in the market, which is fundamentals. And whether or not you support this idea or not, that's completely up to you. But we have been adding these analyses in terms of the fundamentals for quite some time now. So I just figured, you know what, I want to make my technical analysis a bit more mechanical, a bit easy to understand, and very simple, which can be used by everyone. Okay, so for those that don't know, here at TradeX Prop, we've actually partnered with a very notable and well-known company called Tradictive Proprietary Limited, and they basically make courses, but also they have their own in-house patented technology. And here on the screen, you can see these red and blue boxes, as well as this indicator here at the bottom. This is their in-house indicators with their own algorithms and their own coding. The one on top is the UFOs, and the one at the bottom is the auto climate. Okay, so essentially I won't go too much into details because this is not the point of the video, but essentially the red boxes are areas where there are likely sell orders or unfilled sell orders, which is just areas of resistance, and at the bottom in the green it is just unfilled buy orders, which are areas of support. At the bottom indicator right here for the auto climate, essentially it gives you a statistical look at if a market is likely to be overextended or overbought or oversold, which lets you in on some insights to whether or not you should even be looking to buy or sell the markets. So really quickly, I'm just gonna go through this real quick. So essentially right here currently, this should be in white, currently we have 5, right? And this one essentially means, one sec, so we have current 5 and we are in a red climate, which means we should be looking for sells. Essentially current 5, it means compared to statistical data right here, the bullish climates based on historical data, one standard deviation means 68% of the times it lasts for 6 climates and then it reverses or it has a pullback, right? So currently we are in a red climate, right? Currently it's 5, and based on historical data, we have had 6 climates before we saw a pullback 68% of the time. Okay, so with that in mind, this just shows you how viable your trade idea may be or how far it will run. This is the same thing, max distance, right? Currently we are at 1.96, and based on 2 standard deviation, which is around 98% of the time, we are at we normally will see 1.14, and for the bearish scenarios is 1.21. So currently you can use this number to see that we are pretty much very overextended on both sides of the market. So that's just a quick explanation on how to use it or what it looks like. You could obviously find the full podcast that we did with the founder, Mr. Jose, on our YouTube channel. He explains it in more detail right there, but this is essentially what it does. So I won't waste too much of your time. Let's get straight into the outlook. So first off, let's actually take a look at the S&P 500. If I can put that out real quick on the ON price feed or move for drawings. So I will purely use the indicators, but I'll also obviously use some price action information. So let's hide this worry here. Okay, so let's take a look at S&P. So here on the daily chart, we saw that big dip on tariffs, and we saw it being bought back really quickly. You know, as I've mentioned in a previous outlook, whenever we have something like this, which is very, very reactive, right? It's a reaction to whatever news release just came out. When that happens and we see a large dip in the markets, normally we will see it being bought back really, really quickly, right? Super quick. Now, whether or not the S&P 500 is actually bearish or bullish, we kind of need to look at the data release that we just saw released last week. So here we have Forex Factory, and we saw CPI data and PPI data come out last week. CPI actually came out right here, year on year. We came out positively, which is good. We are seeing inflation cooling, and PPI we are also seeing it coming in soft, right? So that is music to the Fed's ear, because with both of these really important news, this data release come out for the US economy, it is now giving them room to cut rates, and some analysts even forecast even up to 4 times this year, which is really nice. So, you know, lower rates, that typically means bullishness for stocks, because it eases borrowing costs and also it boosts growth. But here's the catch, right? Just because we saw US data come in bullish, we are currently trading within the Trump era, and many things will, be dependent on Trump trades, right? We're seeing the US-China trade tariffs and tensions being escalated almost every day, and this is what's making the markets very choppy. Normally, in a sense, if we didn't have these trade tariffs, this data release would be really, really bullish for equities, for stocks, and for other higher risk asset classes. But because of how uncertain the markets are, this is a very tough place to be, right? We saw Trump had a 90-day tariff pause for countries that did not retaliate, and that kind of calmed a bit of nerves. But ultimately, zooming out, if you go on the weekly or even the daily is enough, you can see that we're pretty much stuck in a big range of consolidation until there is more clarity on how the trade tensions escalate. So, long term, obviously, I would be bullish on indices. I pretty much always am, unless we see a crazy big crash, which would probably be akin to the GFC, the global financial crisis back in 2008. But as of now, for next week, I don't really have a clear bias per se until we see more information come out for the tariffs. Okay, so bringing it back to technicals right here, you can see that if I go on the weekly chart, we are coming into the 200-day moving average with this line right here, and just beneath that 200 moving average, we do have a weekly bullish UFO around the 4.6 to 4.5k mark right here. I don't know if we are going to tap it next week, but if we do continue dipping after this correction and we do continue dropping, we could find some support around the area. Looking at the climate, we are currently in a bearish climate, so this isn't the time to look too long just yet. In fact, I'm expecting it to continue this dump, kind of like washing away all of these profits right here. And just how uncertain the markets are, this wouldn't be a far-fetched thing to say. Okay, so we are slightly oversold based on the climate. So definitely we could see some short-term low time frame pullbacks into areas of resistance, and then potentially look to short that if you are a two-directional trader. Okay, going down to the daily, however, it's a bit less clear because we are pretty much wedged between these two areas right here. And I don't want to take a look at this, right? But what I want you to focus on is I want you to put your attention to these two areas right here. We might see price continue bullish until we retest this 200 moving average and also come into this cluster of auto UFOs, which are bearish, to see price continue pushing lower. Okay, we have formed a green UFO, but I don't necessarily like to trade off those because we literally just formed at current price action. Okay, so coming to the 4 hour, it's a bit clear. We could see a retest of this area, right? And then potentially seek to take price lower into like a daily support or even into the weekly moving average, as well as their weekly green UFOs. Okay, so that is it for the S&P 500. Let's take a look at the next pair, which is gold. Right, so right here on gold, now taking off the indicators, gold is really bullish, right? We've been bullish for some time. Personally, I am a perma bull gold, but short term wise, we just broke 3.2k, and I'll be honest with you, I wouldn't be surprised if we kept going higher, right? Gold right now is like the star of the show. We saw cooling inflation, and we've also seen a weaker dollar, which I'll pull up later on, the DXY. But the DXY is really weak right now. We're breaking beneath the 100k mark. So, you know, pulling back gold right here, we are seeing all these things acting as rocket fuel for gold. And when you add in the safe haven demand, you know, from trade wars and escalations, and you know, countries like Germany or even Japan, which are eyeing diversification away from US Treasury use and Treasury bonds, you are going to be seeing gold continuously screaming bullish, right? I mean, I wouldn't be surprised if we hit, you know, upwards of 3.5k or even 4k really quickly, like we saw gold shock us back in 2024 last year. It's not crazy for you to think so. Now, obviously, there are going to be people that have been trying to call tops, and for those of you that are highly leveraged on shorts, betting for gold to kind of do a pullback, I would advise, you know, obviously this is not financial advice, but I would advise for you in your future positions to, you know, kind of not bet against gold, specifically gold and other safe haven assets. Okay, so taking a look at gold on the weekly, there's obviously no areas of resistance on the top because we are coming into price discovery, where gold is likely to find price action structures around like $5 increments. So currently nothing on gold for price to, you know, push it downwards. We obviously have a bunch of areas down below just on how one-sided the market has been. The EMA is trying to catch up, but it is way down beneath there on the daily. So right here on the weekly, right here on the daily, it's also trying to catch up. It's like so far away from where current price is. 20% drop on gold is where we will see price retest that moving average. So that might be pretty obsolete as of now. So taking away the indicators, let me just pull my fit up. So you could use Fibonacci retracement tools to expect some form of retracement. That is also something you could look at. You could pair it with the auto UFOs. If I draw the Fib from this obvious swing low to this current swing high right here, we currently can see which levels do align with the 50%. Here we have this green UFO around the 3k mark, and also just a bunch of levels on here. So essentially next week, if we do get a pullback, I wouldn't mind taking longs around the 3k to 2.9k mark to break new all-time highs, since this is the latest swing leg But if we do keep making higher, then you would adjust your flip tool and maybe even anchor it to something beneath here. Okay, that's completely up to how the markets react, but as of now, based on current price action, this wouldn't be a bad place to look for continuation longs. Okay, you could go on the 4 hour. These levels are obviously a bit too high up. We do have one that was tapped, 3K to 3K mark, and here we have one that's at 2.9K and coming closer to the 4 hour moving average. So they are definitely still looking to, long gold whenever possible, just looking for pullbacks to get involved. I personally will not be looking to short gold unless it's a very quick intraday scalp. Okay, so that is it for the start of the show. Gold. Let's take a look at the DXY. Okay, so here we have the daily chart, and it's just like I said, it's a dollar bloodbath right here. Weak PPI, weak cooling inflation, which is cooling CPI. This causes rate cut expectations, and this is just crushing the dollar. And potentially, I am currently anticipating more downside, right? Obviously, with just how uncertain the markets is and how the markets are currently, safe haven currencies like the JPY, the Japanese yen, and the Swiss franc are also going to be seeing price soar as global reserves shift away from US Treasury side. Take a look at the UJ, which is where's the ONR price fee? Yeah, UJ as well. We're seeing prices dip really heavily. Okay, so going back to the DXY, we're also seeing that similar move. It's just dipping and dipping and dipping. Okay, so with this in mind, if we could see the dollar pull back, correcting this extended move, we could continue seeing it come into this area of resistance around 101 to 104, and we could see price dip from here. We could see at that point in time the moving average come lower, of course, and then we could see that push up, correcting this move, and then this dip lower. Okay, currently these areas down below, the 97 and 95K marks, they are potential areas of support, but since I am technically bearish on the dollar, I wouldn't want to, be caught trying to catch a falling knife, right? So, but you could obviously use this analysis with your other pairs that you trade, like maybe UCAD, right? You could trade UCAD. Right here, UCAD is also falling. You could trade UJ, like I said, or you could trade USD CHF, dropping really horrendously as well. So any of these asset classes you could pair with the dollar. Since the dollar is weak, you could just long anything that is against the dollar. Okay, seeing as how we are expecting the DXY to continue dropping lower. All right, so okay, so that is the dollar index. Let's take a look at the US 10-year U chart. Okay, so bonds. Bonds. Let's take a look at the 10-year. What's the US 220? 20-year yield is also rising. Same thing as the 10-year yield. So with that in mind, oh, that's a big chart. Okay, so with that in mind, right, with yields, the 2-year yields, they're dropping really quickly. That kind of caused, or at least pressured Trump's team into pausing tariffs, which is just proof that bonds, they're moving the markets and that they're moving policies, right? But countries like Japan and China, they might actually be selling US treasuries, moving their money into their own bonds to prop them up, or even something like gold, right? And with that action, that's a potential cause for repricing, which is what's keeping the bond yields super duper volatile, right? Like, take a look at the 10-year yields right here. It may not be as interesting in terms of the move the percentage that moved, but you have to watch it and keep an eye on it. It's the same thing you would take a look at gold and stocks. You have to take a look at it, right? Currently, based on technicals, we are pushing above the 200 EMA. We were chopping around it for quite some time. We did find some support once we broke out of here. We did find some support there, but currently we did chop around it. We broke beneath it, but with the tariffs, we saw price skyrocket, and now we have broken above it. So at the moment, if possible, I would like to see price come down on the 4-hour to retest this UFO before continuing higher, because if we do, we respect this 200-day moving average, and then we also respect this green UFO, it wouldn't be weird for us to see price continue holding and propping price up higher. Okay, take a look at the daily chart right here at the auto climate. We are currently in a four-day bullish climate. Based on historical data, it was 6, so we still do have some leeway based on statistics to push higher, but I wouldn't be surprised if price just comes back down, retests. We see a bearish climate form, and then we saw a bullish climate form right after that for us to push price higher. Okay, so expecting a bearish to bullish move, or if it just goes bullish, I'm expecting price to retest and then dip after testing this level. Okay, and then potentially retest the EMA, go higher, right? Or maybe form some UFO here and then go higher. So definitely still bullish on the 10-year yields. Because just how uncertain the markets are, it's not a weird place to say that these things are going to be skyrocketing. Things that have been a good hedge against inflation, a good hedge against uncertainty, they are going to be flying. Okay, so last but not least, take a look at the Bitcoin chart right here. So surprisingly, it is still chopping. I'm quite surprised that we didn't see crypto as a whole. I mean, we did see obviously altcoins or meme coins dip further than Bitcoin, but I was just generally surprised that Bitcoin didn't drop as much as it was anticipated to drop upon hearing of tariff news, right? It's just at the moment we saw price kind of not react to tariffs right here was when the tariffs dropped, and we didn't see crypto drop a whole lot. I mean, yes, it did drop into the 74k mark, but compare that to asset classes like the indexes, damn, they dropped a lot. And for some reason, crypto is still being propped up. So Bitcoin is obviously on my radar, not just for trading, but also for long-term holdings. But I cannot say I have any big and strong calls yet, because we're seeing money being moved into gold, we're seeing money being moved into the Swiss franc, the Japanese yen, the safe haven assets, they're flying, they're soaring, and I cannot for any reason say that we are going to be seeing higher prices for the Swiss franc, for Bitcoin right here. We are still chopping, so unless we can take out these highs, break above with momentum, come back down to retest, maybe form a green UFO right here, I can't for sure say that we are going to be anticipating bullishness in crypto, right? Because crypto is a very, very risky asset, and it generally does not perform well in environments that are very, very high risk, which is right now, especially since the US economy is facing a lot of uncertainty. Okay, and if you take a look at the climate right here, we are just ranging, right? There's no overextension, there's no nothing, it's just blue for a bit, red for a bit, blue and then red. It's just ranging the same way we are ranging around the EMAs. Okay, so yeah, that's pretty much it for Bitcoin. There's not much to say really. We are just trapped between two weekly UFOs, so there's not much to see there. Obviously, if price would come down to this area, I will obviously be adding into my crypto holdings, and for those traders that do trade crypto, you might even consider going long on Bitcoin once it comes down into this area of previous accumulation, coming down deeper. It could be a good area of value to just get involved in. Maybe you don't want to have just one big position. You could also have just DCA holdings as price comes deeper into those levels. Okay, so yeah, that's pretty much it for the weekly outlook. Go crazy. 10-year yields, keep that on your watch list. Dollar is crumbling. Crypto is not going anywhere as of now, so definitely want to keep a watch on. So yeah, if you have any other questions or concerns about these outlooks, or just about TradesProp in general, you can definitely leave a comment down below. And I will see you all in the next one. All right, peace.